Hi friends, welcome to our Tax TV channel. Should you move to the new income tax regime? Experts explain the pros and cons. The simplified personal tax regime or the new tax regime, NTR, was introduced with effect from the financial year 2020-21. While the tax rates under this regime were lower, no exemption and deductions were provided, with the exception of deduction for employer contribution to NPS. Budget 2023 has focused on making this tax regime more attractive and has proposed this to be the default tax regime as of now.
Below are the changes in the new tax regime which make it attractive. Rationalization of slab rates. It has been proposed to change the tax structure under the new tax regime by reducing the number of slabs to 5 and increasing the basic tax exemption limit to 3 lakh rupees. Up to 300,000 nil. From 300,001 rupees to 600,000 5%. From 600,001 rupees to 900,000 10%. From 900,001 rupees to 1,200,000 15%. From 1,200,001 rupees to 1,500,000 20%. From 1,500,001 rupees and above 30%.
Increase in the rebate limit under Section 87A. Currently, individuals with income up to 500,000 rupees are not required to pay taxes since the taxes on such income are provided as a rebate under Section 87A. The Budget 2023 proposals have enhanced this limit to 7 lakh rupees for individuals opting for the new tax regime. Introduction of standard deduction of 50,000 rupees under new tax regime. This is a positive move by the government to extend the benefit of standard deduction to the new tax regime, with the objective of encouraging salaried individuals to opt for the new tax regime.
Tax impact, including education cess considering the slab change and benefit of standard deduction. Income level before standard deduction 750,000 rupees existing tax under simplified tax regime 39,000 rupees proposed tax after standard deduction and new slab rates nil savings 39,000 rupees. Income level before standard deduction 900,000 rupees existing tax under simplified tax regime 62,400 rupees proposed tax after standard deduction and new slab rates 41,600 rupees savings 20,800 rupees. Income level before standard deduction 1 million rupees existing tax under simplified tax regime 78,000 rupees proposed tax after standard deduction and new slab rates 54,600 rupees savings 23,400 rupees. Income level before standard deduction 1,200,000 rupees existing tax under simplified tax regime 119,600 rupees proposed tax after standard deduction and new slab rates 85,800 rupees savings 33,800 rupees. Income level before standard deduction 1,500,000 rupees existing tax under simplified tax regime 195,000 rupees proposed tax after standard deduction and new slab rates 145,600 rupees savings 49,400 rupees. Income level before standard deduction 2 million rupees existing tax under simplified tax regime 351,000 rupees proposed tax after standard deduction and new slab rates 296,400 rupees savings 54,600 rupees.
Reduction in surcharge for the income above 5 crore rupees. With a view to make the new tax regime attractive for high net worth individuals, surcharge rate has been proposed to be reduced from 37% to 25% for individuals with total income exceeding 5 crore rupees. With this, the maximum marginal rate for such individuals opting for the new tax regime will be lowered to 39% from the current levels of 42.74%.
New tax regime not beneficial for all. Given that the new tax regime does not provide tax relief to investments and savings, a dip in investments may be seen, which may not augur well in the long run. While the attractiveness of the new tax regime has been enhanced, the regular tax regime continues to be beneficial to those who claim tax deductions relating to HRA, leave travel concessions, deductions under Section 80C in respect of contributions to PF, PPF, life insurance, etc. Further, the deduction relating to interest on home loans is availed by many taxpayers and would encourage them to continue under the regular tax regime.
Below is the comparative table for an individual at different salary levels, assuming following deductions are available under the old tax regime. Deduction under Section 80C for 1.5 lakh rupees. Deduction for self-contribution towards NPS for 50,000 rupees. Deduction for interest on housing loan 200,000 rupees. Standard deduction of 50,000 rupees. Except for standard deduction, none of these deductions will be available under the new tax regime. Income level 500,000 rupees tax payable under old regime, nil tax payable under new regime, nil saving under old regime, nil. Income level 1 million rupees tax payable under old regime, 23,400 rupees tax payable under new regime, 54,600 rupees saving under old regime, 31,200 rupees. Income level 2 million rupees tax payable under old regime, 288,600 rupees tax payable under new regime, 296,400 rupees saving under old regime, 7,800 rupees. Income level 3 million rupees tax payable under old regime, 600,600 rupees tax payable under new regime, 608,400 rupees saving under old regime, 7,800 rupees. Income level 4 million rupees tax payable under old regime, 912,600 rupees tax payable under new regime, 920,400 rupees saving under old regime, 7,800 rupees. Income level 5 million rupees tax payable under old regime, 1,224,600 rupees tax payable under new regime, 1,232,400 rupees saving under old regime, 7,800 rupees.
While there could still be taxpayers wanting to opt for the regular tax regime due to deductions available, individuals who do not have much investments may start considering moving to the new tax regime to avoid the year-end process of claiming deductions and exemptions. So, up to 10 lakhs, old tax regime is good. More than 10 lakhs, new tax regime is good.
Please visit our website www.onlinetaxspecialist.com. Please like, subscribe and share our Tax TV channel and comment.